In this video, I'm going to talk about why bookkeeping is important if you want to grow your business. You did not start your business because you wanted to be a bookkeeper. You started your business because you have a passion for what you do and you want to make money. But without bookkeeping, it's really hard to make business decisions so you could grow your business. So what I'm going to do for you is explain what is bookkeeping, how it's done, and why it's important for your business. I'm going to take you inside of my computer. Let's go. Welcome inside of my computer. Now let's talk about bookkeeping. So what is bookkeeping? Bookkeeping is recording past financial data so you can make future business decisions. Now, what does that mean? It just means documenting everything, documenting the numbers so we can use the numbers to make business decisions in the future. Now, let's talk about the 6-step process of bookkeeping. I'll try not to bore you guys. I'll be really quick with it. So the first step to bookkeeping is you have to gather documents, okay? We have to get the receipts. We have to get the bank statements, and we have to make sure that we're tracking each transaction that's going on in the business, whether we're making a sale, whether we spending money, there's expenses. So that's the first step. Now, the second step is we have to categorize expenses, meaning putting them in different buckets. Next, we have to reconcile. So we have to make sure that we take our book, which if you're doing your bookkeeping in QuickBooks or whatever other bookkeeping software, we have to make sure the information in there matches whatever is on your bank statements. All right. Now, once we reconcile the accounts, everything matches. If something doesn't match, that means we have an issue. We have a problem. And that's usually where you catch fraud and other things. So the next step is the financial statements. There's 3 financial statements. There's the balance sheet, there's the cash flow statement, and then you also have the profit and loss statements, which is also called the income statement. So there's 3 of those that you're gonna get. You can't get those statements unless you have the bookkeeping done first. So that's why bookkeeping is very, very important for your business. Next, you gotta know how to read the financial statements. That comes with more like accounting skills or an accountant walking you through it, and over time you'll understand it. But that's what you use the financial statements for. And then looking at the financial statements, you can make business decisions for your business. Okay. Now, step 1 out of the 6-step process. 1, gathering documents. What does that mean, right? So we're going to collect whatever original documentation that we have, right? Or receipts, the bank statements, any transactions, anything we paid for in cash. We have to keep track of that. That is the source document. That's the first step to our bookkeeping process. All right. So another quick tip is make sure that you are not using your personal account for business expenses. You're gonna make it you have to make it easier for yourself or easier for your accountant. Most accountants will not go in your personal bank account and categorize expenses anyways, but you have to make sure that you're using a business debit card or a business credit card, and every expense for the business is put on that card. Once you start putting expenses or transactions on your personal bank account, it is so hard to go back and try to track what was used for business and what was used for personal. It's going to be a mess when tax time comes around or when you're trying to get your bookkeeping done. So please, right now, if you're doing this, go get a business bank account today, right? So you can make sure you use that business bank account only for business transactions to make it easy on yourself and your accountant or your bookkeeper that categorize your bookkeeping, okay? Next, we have liabilities, which is what you owe, such as bank loans or payroll. If you have employees working, they already work for 2 weeks, you have to pay them a week after. That means that's a liability to the business. You have to cover that. So that's what liabilities is. Step 2, categorizing your transactions. So your transactions are going to go in 5 different buckets, right? So you have your assets, right? Which is what you own, your cash or your inventory. For example, let's say I have a business and I sell water bottle, right? The waters are my inventory. If I buy $100,000 worth of water, that's my inventory. Once I buy that, it's an asset. So we have to categorize it to our asset account, okay? Next, we have equity. Equity, let's say you started a business and it's 3 of you guys, it's 3 partners. Each one of you put the same amount in, $33,300 each, right? To get to 100,000. All of you guys, the owners, have equity in the business worth $33,000 each. So that is going to go to your equity side of the business, okay? Then you have your revenue, which is your sales, which is how much money you bringing into the business, right? Every time you sell your water bottle, right, you create revenue, right? So we have to document the sales process of the business. All of that goes into bookkeeping. Everything I'm talking about here goes into bookkeeping. Next, we have expenses, right? And it could be all type of expenses, employee expenses, contractor, if you're paying contractors, if you are using supplies that you need to operate in your job, paying for certain softwares in your business, all of those are considered expenses. So we have 5 different buckets when it comes to bookkeeping, and we need to make sure that we categorizing everything correctly, right? We can't put something in assets that's not an asset. We can't put something in expense that's not an expense, right? For example, let's say you buy a car, the car is worth $50,000, right? That car goes under assets because you can't expense it right away based on accounting rules. Okay, you can't write off the whole 50,000 as an expense. It is an asset. It has depreciated. It has to be depreciated based on the useful life, and that's typically 5 years for a car. Okay. Step 3, you have to reconcile your transactions. And what do I mean by that? Like I said before, you have to match your bank statements with your bookkeeping software or with your bookkeeping software like QuickBooks. And if something is off, you have a problem. Sometimes people have a lot of transactions that cause duplicates, right? If you have any duplicates or you accidentally duplicated something, you have to go back and find it. Sometimes this process here can be so tedious because if your books are not balanced, then it's not bookkeeping. Bookkeeping is balancing the books, right? You have to balance the books. And then a lot of time, this is where you kind of find fraud and things like that. So you must balance the books and it must match. If it's not matching, you got to go find out why and fix it. So next, preparing the financial statements. Once the first 3 steps are completed, you're going to have your financial statements. That's why the first 3 steps is important. That's why everything has to be reconciled correctly. If not, then you will have the wrong information for the 3 financial statements: the balance sheet, the income statement, which is also called the profit and loss statement, and your cash flow statements. So the 3 steps before create our financial statement. Okay, then I'm going to tell you guys a little bit more about what balance sheet is and the income statement and the cash flow statement. For the balance sheet, it just pretty much shows you the company financial positions, your debt, your assets, your liabilities, and the balance sheet also has to balance. It has to match, right? Assets must equal liabilities plus shareholder equity. And then you have your income statement, which shows the profitability of the business. So revenue minus expenses equals your net income. Your income statement is going to show you that, right? You have top line, your top line is revenue, bottom line is your actual profit and loss, right? Next, we have the cash flow statement, right? This one pretty much shows your physical cash moving in and out of the business, right? If you have expenses, it's going to track that. If you have income coming in, it's going to track that. Next, you have the cash flow statement. It shows cash moving in and out of the business, right? How soon cash is coming in, and as soon as the cash comes in, what time, and as soon as expenses leave the company, your operation expense, your financing expense, your investing expense. It tracks all of that for you for the month, and you can look at your cash flow to see how is cash flow doing, right? Sometimes businesses will do certain jobs and don't get paid right away. They get paid in the future or when the work is done, but sometimes you still have expenses for that work now before you receive the income. So the cash flow, your cash flow will tell you that. So that's why cash flow is kind of important or to track. Now let's do a little deep dive on the income statement, right? So you have the top line, which is where your revenue, like as soon as you sell the water bottle, you have your revenue. Now you have your cost of goods sold, which is the money that we paid to buy the product, right? That's our cost of goods sold. And then you have labor that's factored into that. So if your employees are taking a water bottle and bringing it to the customer and selling it, we have to pay those employees too. So that's the next cost that we have. So it goes all into the cost of goods sold. Then you have your profit after that, right? And then that's the profit for the actual business for selling the product. Then you have other stuff that's not accounted yet, like your rent, your software, your marketing. Once you subtract that, you have your bottom line net profit and your income statement, and the income statement is going to show you that. Next, we have the cash flow statements, which I talked about previously. It breaks down your operating expenses, your financing expenses, if you're paying back loan, things like that, and then you're investing, right? If you're making money, let's say you buying stocks or you're investing in other businesses and you're getting a return, the cash flow statement is going to track all of that, which is good to see if you are in business. And then we use all this information talked prior to make better business decisions. Okay, so we need all that information. We need the balance sheets, we need the income statements, we need the cash flow statements, we need to make sure everything is categorized correctly, we need to make sure we balance in the books. All of that factors into these numbers that we're going to see. We're going to see our revenue, we're going to see our cash flow, we're going to see our profit or growth year over year. Only if you don't have bookkeeping, it's so hard to know if you're growing or not. It is so hard to really know what percentage of business is growing by, what decisions that you need to make. If you don't have bookkeeping, you're literally guessing, right? If you need bookkeeping services or tax preparation for your small business, my team and I can handle that for you. See the first link down below and click for a free consultation to talk to me and my team.